Hi, Mr. Kapur. Well, the last quarter was a bit of a dampener for all cement companies, for y'all as well. Though I recall when you joined in September, you said that things were far bleaker. It appears that you surprised the street positively, which is good news. But we want to talk about what's the way ahead from here on. I've been hearing some price increase that have been taken up in the last couple of weeks. Could you quantify what is the price increase that has been taken in the regions that you operate, point number one? And you're also guiding for around a 10% volume growth for the year. That would mean around 8% for the second half of the year. Is that correct?
Yeah, that's right. So in terms of price increase, October, we did see, despite there being a very substantial drop in volume on a year-on-year basis in October, because of this year, October had Diwali and Dussehra festival falling together, which was not there in the last year. And so while the volumes did go down, but since I think all the industries, all the players were absolutely, struggling to keep afloat in terms, some of the companies were just struggling to keep afloat in terms of positive EBITDA, so price increase did happen. It was primarily led by South and East, where we saw a price increase of about 7 to 8%. We operate in South India, so we did get some benefit of that. West also saw some price increase of 2 to 2.5%, and our little operations in West gave us benefit there. However, North and Central were almost flat to negative in the month of October. And where our major operations in North and Central, where our new plants are coming up, are also there. When I say that, one has to keep this point in mind that North was already on a slightly higher level as compared to the other places, South being the highest in in terms of price across all the regions, but North was also pretty well, and East and all were catching up because last year they had a pretty low price in these quarters. November initial price trends are good. We see a 5 to 10% price increase in different regions. West sees about 4%, South and East also in 3 to 4% region. North and Central, unfortunately, are at this point of time flat. There was an attempt
Mr. Kapur,
of trying to increase.
Mr. Kapur?
Yeah,
let me come in. So you're saying that the initial trends are positive for November, and you're expecting on a blended basis, say 5 to 10% price increase is possible from here.
That's right. That's
right. Got that.
It all depends. Having said that, this is the initial part of the month, and we are all banking on a good demand growth, and which we see because last year November was in any case a Diwali month. So we look at a double-digit growth this month in November as compared to last November on a year-on-year basis.
Okay, all right.
Double-digit growth. I just want to come back to that price increase you said of 7 to 8% in South and East. Mr. Kapur, good morning, by the way. This is Sonia here. Can you tell us what is the cool-off that you expect in the cost per ton? I think in Q2, you were sitting on at about 831 rupees per ton. How do you see it move, say, in the second half of the year?
At this point of time, we are all hoping that the fuel price increase, the costs will start showing a downward trend. Unfortunately, the numbers do not really say that. Like, I normally try to, look at the cost in terms of what is the Reliance Petcoke price, because Reliance Petcoke is an Indian petcoke, which benchmarks itself with the imported petcoke prices. And we have seen over the last 3 months that Reliance has been increasing their petcoke price every month. And it came down to 17,600 rupees per ton in September 22. And today it is sitting close to 21,000 rupees per ton. There is a reduction, I would say, as compared to the peaks. Let's say the US petcoke, which was getting imported at 25,000 rupees per ton, and I'm talking of landed prices in my plants, has now come down to about 20,000 rupees per ton. So I am expecting Q3 not much difference in price, especially as far as when I look at my company. We have some inventory which we are carrying forward. But Q4 onwards, I expect that the fuel prices should go down. But with what is happening in Russia, Ukraine, and other places, it's a little funny world at this point of time. And any prediction that we do, we have to keep this point in mind that, geopolitical situations and the things happening across in the globe might impact the fuel price. So better is to be prepared and keep your belts tight for,
Indeed.
unwanted kind of an or not or an unwelcome kind of an cost increase.
Indeed, Mr. Kapur, just to confirm though, you're saying that the relief comes in Q4 and we are talking about numbers as things stand. So we're not going to hold you for it if things change dramatically. But the EBITDA per ton could improve to what? To around 1,000 rupees, say, by Q4 or more than that, if you could give us a sense. And also volume guidance is 10%, right, for this year?
That's right. That's right. So volume guidance is 10% this year because it all depends, There are a few factors which might kick in. So as we start moving into the next year, we start coming within the hitting range of the next general elections. And we have generally seen that prior to that, a lot of projects which are already in progress, there is a tendency to, close them and start some new projects. I personally feel that EBITDA per ton guidance from as compared to Q2, Q3 may not show much substantial increase, maybe 100, 150 rupees better than Q2. But Q4 onwards, as compared to Q2, I think we should see an EBITDA per ton increase of an industry average going to maybe by about 300 to 400 rupees. So maybe, 1,000 rupees as an average is likely in Q4.
Okay, so 1,000 rupees EBITDA per ton likely by Q4. Just a little more on a larger perspective, right? I mean, you briefly mentioned, Mr. Kapur, that you're seeing a pickup in government projects. And that's been the feedback for a while. But I want to understand more about private capex, because we're seeing a big surge in real estate, a sector that you supply to. Infrastructure is coming back as well. CV makers are telling us that demand has surged. So where are you seeing the maximum amount of commitment in terms of money being put on board?
So at this point of time, you are right. It is private capex. We are seeing an uptake where government projects are also picking up. Rural, which was a little subdued till some time back, seems to be now just showing first signs of again getting back. I think the last, crops last season was okay from the rural perspective. We are expecting that in case a good MSP is given in for the next crop, that will help us. But I think it's a mix of all. It's not just one sector which is primarily driving. Yeah, infra and private investments are leading it, but it's a mix of all. We even see IHB activities taking place across the hinterland of our country in all the other markets.
All right, Mr. Kapur, on the EBITDA per ton, you're saying it could improve by 300 to 400 rupees for Q4. So in that case,
Q4 as compared to Q2.
So Q4 should be in the vicinity of around 1,200 rupees, and in Q3 it should be around 1,000 rupees.
No. So I don't think that's going to happen like that. Maybe, yeah. So something like, so let's look at it like this. What I expect to happen in Q3 is a fuel price or a cost-led reduction of anything between 50 to 100 rupees, and a realization increase of anything between, again, 50 to 100 rupees. I'm talking of on an average for Q3.
Right.
In Q4, I expect again another cost dimension coming in of close to 100 rupees or maybe around between 50 to 100 rupees. And price would all depend on what kind of demand comes. So that could surprise us positively. But I would say that Q4, the EBITDA per ton, we could look at as an industry maybe higher than 1,000 and Q3 lower than 1,000.
Okay. Are the shopping bags coming out, Mr. Kapur? Any inorganic acquisitions that are on your plate right now?
See, we have just announced a 5.5 million ton expansion, and I think we are very happy with what we are doing at this point of time. Of course, as I always say, opportunities, if they come by and if they make sense for us in terms of our long-term business planning, we would certainly, go for it. But we are very mindful of the fact that we have to keep our debt under control.
So as of now, Mr. Kapur, as of now, you're not shopping. That means you're focusing on, on what you have.
I'm giving a non-committal answer. I'm not committing.
Oh, that could be interesting then. Are you looking at a couple of assets?
No, nothing. So I don't want to talk of that. We are not looking at any assets per se. In any case, I, in my role as Chief Operating Officer, just operate the business, and our strategy team keeps looking at various options if there are any.
Okay. Generally, when denials mean denials, non-committal generally means that something is in the offing.
No. Let me not, help you in drawing that kind of a conclusion. Sure. Nothing as of now. You have seen that we have already committed.
We take your word for it, sir.
Of EBITDA, and
we take your word for it. We take your word for it.
We're looking at 25. So let me tell you, We are looking at 25 by 2025. So 25 million tons of capacity by 2025 in a healthy, profitable, growth-based manner, the way we have been doing for last 15, 20 quarters.
Got it.
All right, we will leave it at that. Great speaking to you. Thanks a lot for telling us about the environment, the cement industry, and of course your own business. Let's slip into a quick break. On the other side, Sanjeev Singhal of Mazgaon Dock Shipbuilders, a stock that has had a fabulous run, is going to join us in